Buddy, we have Jason Wild here. Thanks for joining, man. We really appreciate it. Good morning.
Morning. How are you guys?
We are good. We're really excited. As you know, we're very fascinated and we love the cannabis industry and we see so much potential. So feel honored that you're here. For our listeners, if you don't mind, we'd love to run through your background and how you got to where you are today. And then probably just shoot you some questions. But yeah, we're super excited and you have so many things going on. So thanks, man. Appreciate it.
Oh, absolutely. Absolutely. So yeah, thanks for having me, guys. In terms of my background, so I'm originally a pharmacist, got really interested in the stock market around my last semester in pharmacy school. So started investing in drug stocks and practiced pharmacy for about a year. Was sort of bored out of my mind, filling prescriptions. Loved the market, and in 98, end of 98, launched a fund, a hedge fund with $80,000 under management. And my view was sort of, if you build it, they will come. I felt like as long as I can get an audited track record going for some period of time, that eventually we'd be able to raise money if the numbers were good. So did that. Launched in October '98. For the first 12 years, we did only public equities, and my real wheelhouse was what's called like the specialty pharma sector, which is all the drug companies that are smaller than the big caps like Merck and Pfizer and Abbott. And the reason I like those smaller companies was because they were more entrepreneurial and they were easier to get access to management. For me, when I would call up the CEO, and also if they had one new product that I thought was going to do really well, a small product's going to mean a lot more to a smaller company in terms of moving the needle, in terms of their earnings and all that, than it's going to mean to a large company. So yeah, as an example, Pfizer, back in the day back in the late 90s had 20 products that were doing over $1 billion in sales. So, they launch a new blockbuster $1 billion drug, it's barely going to move the needle, especially when they had other products that were going to be going off patent. But if you're a little company that's doing $100-some-odd million in sales and you're launching a $1 billion product, it's obviously going to have a lot more of an impact on your earnings and your stock price. So did that for the first 12 years, really gravitated towards the companies that were doing M&A, buying assets, buying companies. And I felt like I was pretty good at, immediately being able to identify which were the good deals and which ones weren't. And I even towards like 08, 09, I referred a few deals between companies, made those companies a lot of money. And, I got a pat on the back. So that was the idea that I had in 2010, that I wanted the fund to own a drug company. I've always run my fund like it's my family office, in terms of, I look at it like I'm running my own money and any other money I take along for the ride is gravy. But it also gives me a little more latitude to do the things that I want to do, as opposed to being too worried about what my investors are going to think, or whether it's going to impact my ability to raise more money. So in 2010, we updated our subdocs to do private investments in the fund, and we bought this little company called Arbor Pharmaceuticals for about $2.5 million. They were doing like $1.5 million in sales. And it was really, we bought it to use as a platform to go out and build it into a much larger company. They were licensed in every state, and it gave us a little bit of a running start. And Arbor just became a grand slam that first year. We found 3 deals that were unbelievably accretive. So that 2011, which was our first full year that we owned the company, we took the company from about $1.5 million in sales to they did $127 million in sales and $55 million in pre-tax profit. I was like, I couldn't believe it. Was super excited. Never thought that we'd be able to build such a substantial company in such a short period of time. But the company kept growing. By 3 years later, we were run rating at over $100 million in pre-tax profit. And we ended up selling a third of the company to the big PE firm, KKR. And they paid a $1.12 billion valuation for their stake, which means that they put in about $350 million to buy a third of the company. And the great thing was they bought all secondary shares, which means that they bought it from existing shareholders. The money didn't go to the company. So I was able to go out to all the investors in my fund and say, hey, KKR will buy every share. You'll sell them at 155 times what you paid for it, 3 or 4 years ago, in the fund. How much do you want to sell? So that's what we did. We sold about $150 million worth of our stake. And that was all then. Now, this was 2015. It was all like sitting, in cash. in my fund, and I'm usually pretty bullish and find stuff to invest in. But this was the first time I had a lot of cash sitting around, and it just dovetailed really well with me getting a call from a Canadian banker raising money for one of these new medical cannabis companies up in Canada. I had never heard that Canada had legalized cannabis, but I thought it was really interesting. I decided to take a trip up, see what that was all about. Flew up to Toronto, met with this company, Metrum, learned all about, from them, all the true, or a lot about the true medical uses for cannabis. First time I ever heard of CBD and the other cannabinoids. And I realized that this was, real medicine. So leaving that meeting, I just sort of was very excited to go out and try to meet as many companies as I could up in Canada. I thought it was perfect that it was legal nationwide, so I wasn't worried about getting arrested or anything like that. And I felt like if it was legal federally up there, that was going to be those were going to be the companies that were going to attract the most institutional capital, or at least attract it first, because people would be, because fund managers would be more comfortable investing there than say the U.S. So that first year or so, around 2015, we met with like 30 companies. I did a few trips up to Canada, a few of them where I started in Vancouver, worked my way to Ontario over a few days, met with 30 or so companies. We ended up investing in about 5 of them. And fortunately, those 5 became some of the leaders in the space over the next few years. Say by the end of 17, we were top 10 shareholders in Canopy Growth, in Chronos, Organogram, and a couple of other companies as well. And then that is what, towards the end of 17, it sort of hit me that I had followed like the same arc that I had followed in pharmaceutical investing, where I first, for the first 12 years, I invested in, non-controlled positions in pharmaceutical companies, but, learned the space, made some money, built a network. I felt like, and then brought all that to bear as the chairman and the lead investor in Arbor. And that, that worked out, obviously, pretty well. I felt like I just followed the same first part with cannabis. I had been investing for 3 or 4 years, learned the space, built a network, made some money. And it sort of hit me that I wanted to do like Arbor 2.0, which was to start or to, take control of a cannabis company up in Canada. And I guess the difference between Arbor and my idea here with, starting a cannabis company was that I felt like we could really be one of the top 5 players in the world in not too long of a period of time, because there wasn't that much competition. I mean, it's not like I was competing with Merck and Pfizer and, and Abbott and things like that. So I just felt like the opportunity was really more wide open. So that ended up sort of manifesting itself in this deal that we did in a company called TerraAscend. TerraAscend was a company that we had invested $250,000 into like 10 months earlier in January of 17. And they had about a $45 or $50 million market cap. And I was able to convince the company to take a $52 million private placement. So it was obviously going to be a big stake. And it was going to be a company that I was going to be able to help sort of shape. I like Canopy Growth and Canopy Rivers, which we were also one of the largest shareholders in. I let them co-invest in that deal with me. So I did 60% of it. Canopy Growth did 20%, and Canopy Rivers did 20%. And that's really how we got started, with TerraAscend, or how we took a bigger role there. And for the last few years, I've been spending a lot of time. I'm the chairman of TerraAscend, spending a lot of time working on that. But on the fund side, we still invest in a lot of cannabis companies, and we still invest in healthcare and consumer products as well. At this point, the fund is about 1.25 billion in assets under management, and I feel like we're just sort of getting started. I mean, this is the cannabis space is so exciting. I'm so much more, not that I wasn't excited 10 years ago when I would wake up in the morning and we were investing in pharmaceuticals and consumer stuff, but I just feel like there is such a huge opportunity ahead of us in cannabis, and I feel like we're pretty, I'm excited about how we're positioned there.
Yeah, man, I agree. And congrats on all the success. It's super exciting. And I'm not just saying this, but TerraAscend is one of my favorite companies. And it's easy to believe me when you go look at the stock chart in the last 6 months. But it just seems a little bit different than the other ones, like the operators and the team. So congrats on all that. I have so many questions for you.
Sure.
Where I'd like to start is pretty much at the beginning where you said you started a fund. What was that like? I mean, did you know people that were doing the same thing? Did you just jump right in? Kind of what was your process on that?
Yeah, I did not know. I didn't know anybody who was doing the same thing. I was reading Barron's, and there was an ad in the classified section of Barron's that said, "Do you want to start your own mutual fund or hedge fund?" I've been doing really well on my own account, and I felt like I was a good stock picker. You know, my view now in retrospect, after 20 some odd years, is that you're either sort of mentally built to be a good stock picker or you're not. And generally, most people aren't because they have a tough time, selling their losers and holding on to their winners. And I have, I was like, go ahead.
I was just going to ask, what would you say makes a good stock picker?
Yeah, I think it's just the ability to hold your winners and sell your losers, or add to your winners if they're executing better than you thought that they were going to. And I think most people just have a problem doing that. It's just the way people are sort of built mentally. I've got other issues, but one of the things that I'm good at is, like, if I have a stock that's going up every day and is really doing well and executing, like I'm allergic to selling that stock. If I have a stock that's on my screen every day and it's red and it's just like taking too much attention from me, I want to sell that as quickly as I can, as long, unless they're just, crushing it from a fundamental point of view and the market's not reacting. But usually when your whole portfolio is going in one direction and you have a couple that are not working, usually it's because usually the stock isn't working because the fundamentals are not necessarily working either. So that's it. I mean, it's just there's a Warren Buffett or Peter Lynch saying, don't pull out the flowers to water the weeds. And that's what a lot of people do. They lock in their winners if they're up 10 or 15%, and they all say nobody ever went poor taking a profit. But you do go poor if you always take your profits. If you go up 10, if they go up 10%, and you hold on to your losers forever, because then you're just going to end up with a portfolio of a lot of underperforming names.
That's awesome, man. Good stuff. So another question for you. It seems interesting. You said you saw that Barron's article, and then now you've come full circle and they released that new Barron's article about you. That was pretty cool. Would you say that like growing up that you had big ambitions and big dreams? Did you see yourself getting to this position? Or did it just kind of happen? Like, how did that kind of manifest?
Yeah, I would say that I've never, I didn't necessarily expect that, we'd be running over $1 billion. For sure, I didn't expect that we'd be running over $1 billion. I remember saying to a friend when I first started the fund with 80 grand, maybe I was up to like 300 grand under management. I remember saying to him, if I could just get up to like 3 million in assets under management, I'll be like set. So I didn't have like very sort of, I didn't set my goals that high in terms of, where we would go. I think the key was just, I found something that I loved. I was always sort of one of those, in high school, I was one of those underachievers who I was in like a lot of the advanced classes, but I couldn't pay attention because I was just bored or paying attention to other stuff. And what I've realized in retrospect is that, like, the things that I am passionate about and that I'm into, I'm like 1,000% focused on them. Like stock picking, which was, I found to be one of my first loves. And also when you're passionate about it, very often, you can really excel and do well as long as you're, in the case of stock picking, as long as you're sort of built right in your head as well. But I just, to me, it was always about stock picking. And I love that so much. And I felt like if I kept doing that, then everything else would sort of take care of itself in terms of building a business that would be sustainable and that I'd be able to make money off of. But, those first couple of years were a little lean. I practiced as a pharmacist a couple of nights a week at the ShopRite pharmacy in Paramus, New Jersey, which is a big supermarket chain on the East Coast. So it wasn't, I just wanted to get to the point. It wasn't to get to $1 billion fund. It was just to get the fund to a size that I could stop, practicing as a pharmacist a few nights a week and be able to support myself.
What was the conversations like with your first investors in the fund?
It was that 80 grand. I think it was like 50,000 was from me, 20 was from my dad, and 10 was from my buddy who I had made a lot of money for in the market before that. So it wasn't. It wasn't. I don't remember specifically the conversation, but I remember in that first year or so, we were able to get. That was like, those were the go-go days of the late 90s. You guys are probably too young to remember that, or you're probably little kids. But it wasn't that hard to raise money the first year or so because the market was so hot. But what happened was, in 2000, we sort of ran into a buzzsaw like almost the whole market did. And that was when that's when I realized that investors, that some are a little more sticky and are looking to play it for the long term, and others aren't. We lost a good amount of those original investors that we got in 98 and 99. We lost them, and we lost a bunch of them in 2000. And I would say overall, in terms of the fund, it's not like it's been a straight line. I mean, we've been up about 25% a year net of fees for 20 something years, which compounds, really,
Amazing.
really well. But we've had years where we've been, up over 100%. And we've had, I think, like four down years as well. Never down as much as our good up years, but we've always told all of our investors, this is, we're in this for the long haul. I like to look at things, 3 to 5 year periods, and I always feel comfortable we're going to make money over those periods. But on any given year or any given month, you're going to have volatility. And I think what differentiates us a little bit from other funds is we don't really try to manage away the volatility, because if you try to do that, then you're just going to have, lower returns. A lot of people are especially institutional investors, they're very attracted to a fund that's up 8% a year and never has a down month. But I'd rather be up 25% a year and have a few down months. So that's sort of the way we've looked at it.
I don't really know much, if anything, about how funds work, but is it basically that you have a chunk of money, and do you have certain guys managing certain portions of that and they're constantly trading, or what does that kind of look like?
Yeah, different funds are set up differently. Ours is set up as originally we called it a hedge fund, which just means it's a limited partnership that you set up. The fee structure is 2 and 20, meaning you get a 2% management fee and then 20% of the gain at the end of the year. And some funds are set up with multiple managers, and then others just have one manager. In my case, I'm the only investor, in terms of calling the shots for the fund. And I was the only employee for the first 6 years or so as well. But we run everything. I think it keeps it a little bit more sort of entrepreneurial, and it helps drive better returns when there's one person making the decisions and not like an investment committee that I have to go in front of and have them sign off on my investments and things like that.
So that's really cool. And I guess so you got your finger on the trigger as the sole guy. Like, are you looking at and trading every day, or are you looking at companies and just more than often, and then just deciding which ones to get in and out of? What does that look like?
Yeah, I would say things have changed over time. In the beginning, we were a little more active, and when you have a fund that's a few $100 grand or a couple $1 million, it's easier to make a trade and have it have an impact on your results. I mean, if you make I used to be sitting in front of my screen a lot more. Now I'm doing a lot more sort of work where, since COVID started, less trips. But up until then, I was visiting a lot of companies. I always felt like I could get a lot more value by getting off my butt and going out and visiting a company. Visiting the cannabis company back in 15 or 14 was a good example. So I do more of that, and we've moved towards doing more of that over the last few years. But in the first few years, I was a pretty active trader as well. Like, my view was like, if I was sitting in front of my quote screen and I saw that Teva Pharmaceuticals, which is a big generic player, if they got some approval for a new generic, lots of traders who were sitting in front of their keyboards, they could go buy Teva. But I knew, I felt like quicker than most others that were able to pull the trigger. I knew, oh, well, that's bad for, I'm making it up, that's bad for Watson Pharmaceuticals, because Watson had the only generic in that product for the last 3 years. Now, not only they're going to lose market share, but the price is going to go down because Teva's going to lower the price to compete. So maybe I would short Watson for a trade. And, and if you can make a, $50,000 trade on a couple of $1 million fund, that, that has an impact on the performance. When you're running over $1 billion, it has a whole lot less of an impact on your performance. I still do it. If I happen to be in front of my computer and there's something, tradable, I'll still do it. And I joke, well, if I, found $20,000 on the sidewalk, I'm gonna bend down and pick it up. So I do it just to sort of, it does add up, and I do it because I want to stay sharp and feel like I'm still sort of in the mix. But it has less of an impact overall on the portfolio. And nowadays, the portfolio in the last 10 years or so, much more driven by, the long-term appreciation on a bunch of our investments.
Just in terms of trading in 2020, I mean, this has been an unprecedented year, all the uncertainty coming into the United States and investing in the stock market and the economy at the start of the year. And I remember last time we talked that you said you were starting to notice things a little bit earlier than when the headlines, started coming out on CNBC. And I know that you have mentioned even in this talk that you're looking for companies that are going to do well and with a lot of opportunity. And so this year, with everything hitting the world, did that affect maybe your mindset or the way you were looking at your investments or all the uncertainty? How did you kind of work through that at the start of the year?
Yeah, so COVID's first, I feel like everybody started talking about COVID at some point in February, even though I feel like everybody looks at sometime around March 11th to 12th is when it all really hit the fan, where everybody realized, people's schools started closing and things like that.
March 9th is when the circuit breakers started hitting.
Yeah, exactly. So, but towards the end of February, we when we started to realize this was a major issue, we sat down and we looked through our whole portfolio and said, okay, what are the haves and what are the have-nots in this portfolio if COVID becomes a much bigger problem than we're all thinking it is right now. And as I mentioned, we do invest in things other than pharma and cannabis. We do some consumer stuff as well. As an example, we've owned Amazon for 8 years, and we have it's a pretty large position for us. So we went through the whole portfolio. Amazon, it was a have. I mean, because it's obviously everybody's going to be sitting at home probably and getting even more things delivered. So it felt like Amazon was a have. Things like cruise ships and travel and retail were have-nots. Fortunately, we didn't really have a big weighting in any of those. Although we did short some of the cruise lines. I just felt like I had to do something, some kind of COVID trade. But as we look through, and I felt like pharma would be a have because everybody still needs to get their medicine and things like that. But cannabis, we were sort of debating, is it a have or a have not? And we weren't really sure. I mean, I made all the arguments. People are going to be sitting at home more often. As opposed to, there's lots of people who consume cannabis when, maybe instead of a cocktail or something when they get home at night. Well, now they're going to be home all day. They're probably going to consume a little more. And also, it's a couple of the main indications for cannabis are anxiety and sleep. I think a lot of people are going to have a problem with that, with what's going on with COVID. But then the other side was, well, if we're going through a depression, nobody's going to be able to afford anything. Generally, I sort of tilted towards that it would be a have, not a have not. And it certainly, in retrospect now, however many months later, 10 or so months later, it definitely became a have because of everything that happened with it being deemed essential in all these states, and demand has gone up so much. And I wish I could say that I totally saw that it was going to come out so much stronger. I didn't, but I felt like it wasn't necessarily going to be hurt. We did put on a few other trades, and when the market, while I'm not big on, a lot of people always want to talk about where do you think the market overall is going over the next however many months. And I usually don't like to spend that much time handicapping that because I found that I'm not that good at it. I will say that I think it was the beginning of April, all of a sudden things started to feel a little bit better to me, even though the market was still acting poorly. Because I just sort of, realized, the market always looks ahead, right? So even though it's devastating what's happened in terms of all the people that had died up until that point and that have died even since then, I sort of realized that at some point, this is going to come to an end. We're going to have a vaccine or a cure or something like that. And the market always handicaps the future. It's always betting on the future, not what's happening right now. So we did get we got a little more bullish. And fortunately, we had a bunch of cash to put to work because we had done, TerraAscend had done a financing with Canopy Growth. And it ended up at the same time, TerraAscend paid back about $45 million that my fund had lent to the company. So it just worked out really well that this cash came in. It came in like in the middle of March. And so we had some cash to put to work, and we put it to work in some of the names that we already owned, like Amazon.
And you came in and got some stuff at a 50% discount.
Yeah, so some of them, not quite 50. You know, the ones that helped up the bat, the ones that were halves, maybe they were down 35% instead of 50. But
Right.
yeah, we got some good discounts. But generally, that's, like I said earlier, I like to usually buy things when they're going up, not when they're going down. But this was sort of a big, sort of exogenous event that was affecting the stocks.
It's pretty wild. I think we all think this way, but that cannabis could be classified as essential, yet it's federally illegal.
Crazy.
You know, what in the world? I'm a big fan of cannabis. I like to consume it. I can't wait for the beverages to come out. Are you a fan yourself? Do you consume cannabis in any way, or CBD or anything like that?
Yes, I do.
Nice.
I think
Nice.
that, I think that it's definitely, it helps me. It makes me more creative. A lot of times I'll be sort of trying to, think through a problem. I think being in the cannabis industry overall, it's like, I joke that it's like a Ironman triathlon of extreme problem solving every single day, because there's so many extra hoops you have to jump through because of the legality, and this bank won't bank with you, and this company won't do business, things like that. So it's a lot of problem solving. And I find sometimes when I'm like, sort of banging my head against the wall trying to figure something out all day, and then at night, if I consume cannabis, all of a sudden it gives me a different perspective to look at it, and often I come up with an answer that I wouldn't have.
Yeah.
So I enjoy it, and I think that it's definitely been additive to my life and to my career.
Nice, man. And I'm drinking the Kool-Aid. I think it's God's gift in a lot of ways. I was at a wedding this weekend, and this guy, he's like 67 years old, and his legs are really, really bad. He can barely walk. And I got him to try it. He's never done it before. And he literally told me, he's like, my brain doesn't really connect well with my legs normally, but when I tried this, like, it does. I'm like, what in the world? Like, this is like a miracle thing in a lot of ways. I thought that was amazing.
Yeah, totally.
But
that's amazing.
Yeah, it really is, man. But I guess to back up a little bit, and then I'd like to talk some more about TerraAscend.
Yeah.
Selling to KKR for $1.2 billion is a massive accomplishment. What did that look like as far as the whole process? I mean, I would assume that was a 2-year process of 50 meetings or something like that. Like, how does a deal like that go down?
Yeah. So the backstory on that was Arbor was approached by another public company, pharmaceutical company, that wanted to buy them. So we had already chosen to go public. We had already chosen the banks that we were going to go public with, and we were going to do an IPO. And then we were approached by somebody that wanted to buy us, and we said, you know what? Why don't we run a parallel process to see, instead of maybe going public, why don't we see if we should just sell the company? So that was sort of the start of it. And originally we thought we were going to just sell to some big buyer. And then, we were a few months into the process. We got a few bids from public companies that wanted to buy the company outright. But we had also reached out to some of these PE firms that had been sort of reaching out to us over the prior couple of years, KKR being one of them. And a few months into the process, the CEO and I were talking. We were like, you know what? We're really having a lot of fun. Maybe we don't want to just sell this thing right now. We feel like we have some more upside. So that's what made us go to these PE firms and say, hey, you were looking at TerraAscend. I keep saying TerraAscend, at Arbor. to buy the whole thing, we'd be interested in maybe just selling a substantial stake to you. So this way I can go to my investors and my fund and offer them liquidity. But whoever wants to stay on for the ride for the longer term, they can stay on as well. So that's sort of how it ended up, that KKR deal ended up coming to be. It wasn't 2 years, that was probably about 6 months. And then maybe it was 9 months all the way to sort of announcement of the closing. And it was, but it is a lot of meetings, not quite 50, but several, and lots of calls, and no Zooms. There were no Zooms back then, I don't think, but it is a long process, and it's like a marathon. I mean,
how many people? How many people were in these meetings? I mean, it's like 50 people in these kind of meetings. No.
Yeah, no, it's usually like sort of the principals from KKR that are going to be involved in it. So say 2 or 3 people from their side, and it was like me and the CEO and a couple of people from Arbor, or maybe the meetings were a total of like 10 people.
Okay. So one concept that you touched on last time we talked was a voting machine versus a weighing machine. And kind of where I want to transition is to get into TerraAscend, because TerraAscend seems to be doing very well on the weighing machine and moving themselves up. And, people are now saying they're in the top 5. And I would say, and I follow these things pretty closely. I mean, not only are they in the top 5, but they have a strong backing with Canopy, which in my opinion, in some ways would put them number 1, because I look at Canopy as the king. But would love to hear kind of how you view TerraAscend, what the role of chairman versus CEO is. I don't really understand that, and how you guys are kind of moving forward.
Yeah. So TerraAscend, we did, I should probably add in sort of the explanation of the pivot into the US, because originally I was only doing sort of Canadian companies for the first several years. But around the middle of 18, it sort of hit me that all the business was in the US. And it was, John Boehner had got on the board of Acreage. So that sort of flipped the switch in my head where I said, they're not going to start arresting anybody in the US. There's too many, rich and powerful people involved at this point. So that's what made us pivot into the US. We applied for a license in New Jersey in October of 18. Amazingly, we're within days now of our first sales in New Jersey.
Real quick on that, what does an application for a license look like? Is that like 100-page report? Like, how detailed are these things?
It's super, super detailed, and the state gives points for different things, and you sort of they give you the list, and you try to like figure out how to get as many points as you can. And New Jersey was good because Jersey is the pharmaceutical capital of the U.S. So a lot of the points were given for being a little more pharma-like, which we definitely had a good background with my experience. And the CEO at the time of TerraAscend was a guy named Michael Nishad, who was a pharmacist as well. And he had been an adjunct professor at Rutgers University School of Pharmacy, which is the state, New Jersey's state university. So that was helpful. And these licenses, they are very, very in-depth and difficult, and it costs sort of several $100,000 to file a good license between using a lawyer who knows how to help you navigate it and all of the rest. So that was our first application in the US. The other reason we felt like we had a decent advantage was because we had in Canada, TerraAscend had a GMP certified facility, which means good manufacturing process, and that's sort of the next level up in terms of facilities and processes and sterility and things like that. So we had that in Canada. We felt like that would give us an advantage as well when we were filing our application. So we won that. We came in, I think, either number 1 or number 2 out of 146 applications. They gave us the northern region of Jersey, which out of the 3 regions is the most populous and is it's the most populous and has an even bigger piece of the economy.
How do they go about selecting the regions that you get to operate in?
It's funny. You were allowed to choose which regions you wanted to apply in. So there were 3 regions, and they were giving out 2 licenses per region. We were the only applicant who won all 3 regions. We applied in all 3 and came in the top 2. And I think they just gave us the North because they felt like we would think that was the most valuable.
And so you said they gave you the North. So how many other companies get to operate in that region with you?
It's they gave out 2 in the north during that process, and there had been 2 given out in the north a couple of years earlier. So there's only 4 licenses in northern Jersey right now.
Wow.
Gotcha.
Congrats. Yeah. And it's legal in Jersey now, right? They just gotta
It will be.
they just gotta work out the regulations, I guess.
Yes, exactly. But we so we'll be like I mentioned, it's been a long slog in Jersey, and we spent a lot of money there as well, without any revenue to offset it up until hopefully the next few days or the next few weeks. We believe we have the largest capacity in New Jersey. Once we're fully up and running in the next week or so, we'll have I think it's 130,000 square feet. 40,000 of it we already planted a few months ago, and we've gotten several harvests out of it. But then we have 80,000+ square foot of indoor grow and cultivation, which is coming on in the next few days, and that we believe will give us the most capacity in New Jersey, at least for the time being. I mean, the other licensees are going to continue to add to their footprint as well. But we're really excited, and we believe that we will sell everything out of that facility. Even under medical, we'll sell every gram that we grow and every product that we manufacture. But the really exciting thing about to me about rec coming, probably sometime middle of next year or so, is that there is going to be a huge opportunity on the dispensary side. Because I'll give you an example. Pennsylvania, which I didn't mention, when it comes to TerraAscend, in Pennsylvania we own Ilera Healthcare, which is the #1 cultivator and manufacturer in Pennsylvania. We have 150-ish thousand square foot facility there. And we believe we own 25% of the wholesale market. Pennsylvania is about $1 billion at retail. Figure wholesale is about half of that, 500 million. And we believe we own about 25% of that market. And we sell into something like 98 of 98 dispensaries in the state. And we also have our own 3 dispensaries, 3 apothecariums in Pennsylvania. They're really good dispensaries, but when we look at New Jersey, we think the opportunity is even bigger on the dispensary side, because right now there's only 11 dispensaries in New Jersey versus 98 in Pennsylvania. And with rec coming, there's going to be, we think there's going to be over $1 billion retail opportunity in New Jersey, because it's rec compared to $1 billion for under medical in Pennsylvania. And based upon the amount of licenses that have been given out, it's pretty much impossible for there to be more than 36 dispensaries open upon legalization of rec. So and they're really, there won't even be 36, because there've been a bunch of licenses from the first round from like 5 years ago that never even opened up a dispensary. But if you assume there's going to be 36, you divide that into, say, $1 billion in retail sales, you're talking about, over $30 million per store. And then the big driver of in these limited license states, the biggest driver of the successful dispensaries versus the less successful ones is how much product do you have on your shelves. And considering that we're going to have the biggest footprint in terms of manufacturing capacity, we feel that we'll have the best stocked shelves in our stores, and we're in the best region, being in North Jersey. So, I mean, it sounds crazy, but we think that we could be doing, 45 or 50 plus in revenue per store per year in New Jersey for the first first few years. And, Curaleaf, I think, is a good example of the opportunity in Jersey. Even now under medical, Curaleaf has 1 dispensary in South Jersey that's doing over $45 million in revenue. So we think it's definitely, doable. It's just a matter of, now we're figuring out more things like, how do we get that many people through the doors, and do we have enough parking and all, just logistically, how do you make that happen? But the biggest solve is having enough product, and we think that we're definitely going to be some of the best stock stores in the state.
Is TerraAscend's game plan or strategy to do more wholesale, or are y'all looking to be, run it all the way through the system from seed to selling it in the dispensaries? We want to do both. In Pennsylvania, we have, I think 75% of our business is wholesale. And it's you guys have been following the stock. It drives really good margins doing wholesale, and you don't get hit
when you have retail is when you get hit with this 280E tax, where it's much more punitive on retail sales.
That's BS, man. I just started learning about that thing. That's
Yeah.
real 80%.
It's not quite 80%, but it ends up, it's a real, it has a real impact on cash flow, because it's like, if you're being quoted EBITDA numbers, that's prior to taxes. And when you have the fact that at the retail side that your cost of goods is essentially so much of it is not deductible, it ends up really, really hurting from a cash flow perspective. So the fact that we're so weighted towards wholesale in Pennsylvania, there's an advantage there because we don't get hit quite as hard by a 280E. In Jersey, we think that it's probably going to be a little more skewed towards retail just because we have such a huge opportunity. And when you're selling your own stuff through your own stores, you get hit a lot less hard by 280E anyway. But we really, we want to be very strong wholesale providers in the state. And we want to have, we think we have an amazing concept in terms of with the Apothecarium. I love the name, the Apothecarium, being a pharmacist, and my dad's a pharmacist too. So I love the name. I love the aesthetic. I love the culture that they built out in California with the first apothecariums, and we've been able to sort of transport that into our other markets. So we really think that retail is a huge opportunity, especially over time. If wholesale and cultivation and manufacturing gets a little more competitive, then, we feel that it's really strong. It's really important to have a strong relationship with the end customer or patient. So we really do believe in retail. And we're trying to build both of them to be really strong.
I guess it's better to control the supply first and foremost than to, have as many retail stores as possible. You control the supply, then you can go in and establish retail later.
Yeah, exactly. I think a perfect example, not that you guys brought it up, but Florida is a state where you have to be fully vertically integrated. You can't, so the rate limiting step for all these Florida companies is whether they have enough cultivation, whether they have enough product in order to be able to open up more stores. In the Northeast states, it's not like that. It's, you can get vertically integrated licenses, but you can open up a store buying everybody else's stuff. And that's where we're really happy to be the provider of all that product for all these other dispensaries, because, the wholesale margins are good, and we've built, deep, scaled operations, in terms of being, we only want to really be in cultivation and manufacturing in a state if we can be one of the dominant players, because you just can't drive good enough margins if you only have a 20,000 square foot grow versus 150,000 square feet. Your margins are going to be not as good right now, just because you have less scale. And then if things do get competitive and prices go down, there's going to be some point where the 20,000 square foot grower might not be able to make money, but 150,000 square foot grower can at that given price.
Yeah, to me it is so obvious. I think we all get this, the potentials here, the demands here. It's like the perfect storm because I love the plant and the flower and everything that it can do. And then you throw in the whole business aspect. I mean, I'm chomping at the bit to get in the business. I was just thinking about this. We got this flower right here. Someone bought us. Maybe one day there'll be a cannabis plant. We're in Texas. So, and I know the 280E, I think somebody's challenging that in the courts. I'm really curious, like when you go to a dispensary, at least the ones I've been to, it still feels like it's not like fully legal. And I know that's probably part of the whole deal. It's been illegal forever, but like there's a security guard. There's these, glass that you're behind. Do you ever see that changing where like, I don't really understand why it's like that. It's like they're still treating it like it's illegal in some ways. Do you ever see like just walking into a store and just getting it like out of a convenience store? Can you see the industry getting there?
I can see getting there. I would say the Apothecarium, I mean, that's part of what they were known for. Ryan Hudson, who runs the West Coast for us and was the founder of the Apothecarium, he tells a story about how he had a shoulder injury like 15 years ago and went to a dispensary. His doctor had recommended cannabis and went to a dispensary, and it felt really seedy, and he didn't really feel comfortable there. And that's what gave him the idea of, I want to open up a dispensary that my grandma could come into and feel comfortable. And, if you guys are ever out in San Francisco, happy to have you guys come by and we'll give you a VIP tour, but it doesn't feel like, a lot of the other dispensaries that you've been to. It's more like walking into, people joke, it's like walking into like a Restoration Hardware or Barney's or something like that. So we really have been focused on making it not feel like that. But that's part of just the maturation of the industry, I think. And a lot of these other operators over time, they've been, this whole industry has been cash strapped, right? There's not a ton of capital. So it's, if you can go and spend, $100,000 to build out a store versus spending, close to $1 million, obviously you're going to see the difference in terms of what it feels like. And I think that's a lot of those, those dispensaries that you're seeing out there. But there's a lot of other nice ones, I think, that are going to be, taking a bigger piece of the market that are not like that.
As soon as the industry does start allowing, cannabis companies in the United States to utilize banks, how do you see that shifting the industry? And do you just see it adding kerosene to the fire, essentially?
It's interesting. I mean, in terms of all the legislative things that are out there in terms of safe banking and more and the States Act and all of that, to me, it's the biggest, positives for the industry would be getting rid of the 280E tax. And that's been spoken about as part of some of these legislative ideas. And the other thing, it's not necessarily banking. Like, the banks will bank you now. It's hard to find ones that, they don't, a big chunk of them will not bank with you. But if you're sort of an established player in the state you're in, you can find a bank that will, take your deposits and let you write checks and things like that. To me, the bigger thing is if these banks are granted a, sort of safe harbor to truly bank for you, meaning raising you money, or if the exchanges are allowed, the New York Stock Exchange and NASDAQ allow you to list, like, those are the things that are going to significantly decrease the cost of capital for these U.S. operators. So I think that would be a huge driver. 280E, being able to have these U.S. banks raise you money, and what was the third one was just being able to list on the U.S. exchanges. Those would be huge drivers, I think, for the industry. And maybe, back to your analogy of pouring some kerosene on the fire. But I'm sort of, sometimes I'm a little mixed of what, as we were watching the election a couple of weeks ago, it's like, what would be the best thing for TerraAscend and the other companies that we're invested in right now? From a social justice perspective, I think we want legalization as soon as possible, because it's total BS that, people are getting arrested in certain states for doing the same things that other ones are doing legally in other states and are not going to jail for, right? And that's gone on for so many years, and that needs to be fixed. And from that perspective, we want it to happen as soon as possible. But from the sort of from the perspective of competition and the ability to build, say TerraAscend into a company that's worth even more over the next few years, I feel like it would be okay if we didn't make a ton of progress right away, because that helps a lot of these big multi-state operators to really build the moat around themselves, continue to build their business. And then when all of that happens and all the other big conglomerates can come into the space, they're going to pay a premium to wherever those companies are at the time that happens. If it happens in the near term, then there'll be a premium put on them. But if it happens, 5 years out, hopefully these businesses will have doubled or tripled or quadrupled in terms of their revenues and their profits and their stock price. And then those companies will pay a premium to that. So it's like, I joked with Todd Harrison, it's like, pay me now or pay me more later.
I saw that, man. That's really cool.
And that's what I was thinking too. It's probably a great opportunity for your companies to just continue to grow and grow and grow, and decrease competition, gain more market share, while there's a very high barrier to entry and companies just can't come in and just start up and start trying to do what you guys are doing.
Right. And when the big guys come in, they're going to want to buy, they're going to want to buy their way in because, they do have access to, cheaper capital than most others. And because they're going to want to get big quickly. And, we're not building TerraAscend to be, I just want to make clear, we're not building TerraAscend to sell it, but what are going to be the most attractive assets when the big guys want to come in? They're going to want to buy the dominant players in any given state. They're not going to want to buy the sort of the also rans. So I think that in the near term, it gives us better margins and better protection against prices getting more competitive. And then over the long term as well, like that's going to make the company a much more attractive asset when a Coca-Cola or a Canopy or Constellation or somebody else or a Pfizer wants to get into the space.
I bought more stock today of TerraAscend. Something about it. You said entrepreneurs always have this feel, but I always also have like some superstition. I'm like, we're getting on another call. I'm going to buy some more stock. I love this company.
Thank you. Yeah, I'm excited. I've got a huge piece of my portfolio, obviously, in the stock at this point, and we've added a lot of money over the last year and a half. But I couldn't, if you told me 2 or 3 years ago when we first made this investment in TerraAscend that we were going to be making almost $18 million in EBITDA in a quarter within 2 years, I wouldn't have believed it. It's sort of that's my view. I mean, you guys are entrepreneurs as well. It's like you gotta just get in it and just you gotta be in business to get business.
That's right.
And if you do the right stuff, usually it works out. And this is the case where I'm like, sometimes I wake myself up in the morning and I pinch myself. I'm so excited about the progress we made, and I never even, when we first did it, we didn't even think we were going to be in the U.S. And now we're a top 5 operator in the U.S. certainly by profitability, I believe. And I should just point out also, those are Canadian dollars that you quoted. I want to make sure that people know that the 51 million and the 17.8. We're probably going to switch to U.S. dollar reporting for next year, but we originally started out as a Canadian company, so that's
got it. That's cool, man. I mean, there's so much potential, and it's like you said, you never really thought you'd be running $1 billion fund, but just to what you kind of alluded to is you just got to jump in and put your head down and work. And I imagine you feel the same way, but for Alex and I, our whole thing is we're always going for broke. We don't like money sitting in our bank account. We like to get it out. And it is about making money, but it's also about the journey and the ride. And it in some ways, it's not a game, but it kind of is. Like, it has game-like qualities. Obviously, there's lives at hand and everything like that. But you just have to view it in a different light and not hold on to everything so close and go take a lot of risks, because that's how I view it.
Oh, I agree with you 100%. I always, everybody always laughs at me at work. I always have this quote, we can't let the perfect be the enemy of the good.
Right.
Like, we're not going to have it all figured out, but it doesn't mean that, a lot of times you have to make decisions with an imperfect amount of information, but you can't be afraid to make those decisions. You can't be afraid to sort of get involved. I mean, when we bought into TerraAscend, we didn't know exactly where we were going to take it, but we just felt like you have to be in business to sort of get business. And I also agree, it's really like, I don't even look at the money. I mean, the money is sort of the report card of how well you're doing, and you need to have a sustainable business that can obviously support the employees and be worthwhile for the investors. But my view is like, if you build a business the right way, then the money comes flying at you like you got magnets in your pockets.
Right. Well,
so I agree with that totally.
Thank you. So this is called the Real Estate Podcast.
Yeah.
So we got to talk something about real estate. And what I've learned over time is that because I've done real estate since I was 17 years old, and I said, I'm so passionate about real estate. And what I've learned is I'm not really. I'm passionate about what real estate can provide and what it will allow. And so, for me, it's allowed me to think about cannabis and maybe go venture into cannabis and still build the real estate. And you can do real estate anywhere, and it's a different type of work, like stock picking. It's not a physical labor. Yeah. How do you view real estate? I mean, even outside of cannabis, might as well touch on it because it's the real estate podcast. Like, Do you invest in real estate? I know it has a component with cannabis and IIPR and stuff like that, but what is your thought on just real estate in general?
Yeah, real estate in general. I mean, you're able to, a ton of people I know that are in real estate have been able to build, sort of generational wealth through real estate, and it's very tax advantaged. I would say even especially with the new tax law, what was it, a couple of years ago with the opportunity zones and things like that. I have generally, I've always been more focused on investing in stocks and trying to build companies, on the private side than on real estate. And it's funny, I did really well personally in real estate in like the late 90s. I bought my apartment that I lived in New York City, and then I ended up buying the one next door and another one in the building, and I did well. It was the right time to buy in New York. But I've sort of, it's come back to bite me a little bit. I just sold my house in Bedford, which is in the next town over. I'm in Armonk right now, and I don't think I could have done worse. I lost 30% on that house over 15 years, which
Wow.
like is like almost not even possible, right? They always say like over every 10-year period, unless you bought something in a place that really went downhill, it's pretty hard to lose that amount of money. But I think I've realized that like the whole idea of, the generation before me, so many of those people built all of their net worth through through ownership in their house. I feel like that's not the case here. And, that's not the case at this point, in terms of home ownership, and in terms of, real estate development and things like that. It's just, it's an area that I just, don't have a whole lot of expertise. And I always feel like I'd rather invest in the things that I really know. And I really try to keep all my money in my fund. It's just the best. This way I don't have to, like anyone who invests in my fund, they know that like 99% of my net worth is in the fund, and that's mostly equities. That being said, we have done a couple of sale leasebacks and loans to different dispensary companies and different cultivators, like IIPR type transactions. We have done that because you can get like almost equity-like returns in real estate. And we think there's an opportunity there. And we sort of tied it with, there was a company that we invested in their equity, and they gave us, as part of our investment in their equity, they gave us a ROFR on all of their real estate. So, so we've done a little bit of it, but I'm not, we've definitely had more success in regular equity than real estate. Sorry, that was a long-winded answer, but, it's like, I want to make, it's hard to make, I don't know, maybe you guys have had a different experience, but it's hard to make like 25% a year in real estate. Like I still want to, maybe because I'm less driven by money, I want to sort of like shoot the lights out and continue to be up like 25, 30% a year. And I just feel like that's harder unless you use a lot of leverage in real estate.
Yeah, well, it's definitely leveraged. The key is to get that 25, 40, 50% as soon as you buy it.
Right.
Yeah, we're pretty aggressive, and we're lucky to be in a really, really good market. Some people say Austin, Texas is one of the best in the world. I think it is. I mean, we've got Amazon, and, Elon Musk is coming here, and they're talking about doing a Hyperloop. So it's just a massive amount of jobs, and it's a small market. So Alex and I are just really, really aggressive. We'll buy like, I don't know, 5 to 10 properties a year, but make hundreds of offers. And kind of like your stock picking, we're just good at buying right. And so we do make those type of returns. But I hear you. And I'm glad you said that. What's that? Fund?
Fund.
I know the guy to talk to about getting some advice. But hey, man, I mean, that's really all I got for today. I know you're busy. We really appreciate your time. How can anybody that's listening add value for you? Actually, I had one more quick question.
Yeah, sure.
So I was able to get a hold of you pretty easily, which I think is got to be rare for someone in your position. Is that a fundamental thing? Are you just like open to connecting with people, or do you have safeguards in place? Like, how do you, because I'm actually thinking about that for myself as I'm growing in real estate. I have people reach out to me now all the time, and trying to balance, like, do I talk to everyone? And I I always have. And I believe in doing that because I don't like missing opportunities. But have you gotten to a level where you have somebody that safeguards that, or how do you view that, if that makes sense?
Yeah. I mean, I generally respond to all of my emails, or people, reach out to me through LinkedIn. After the Barron story, I had a ton of people reaching out through LinkedIn and things like that. And I just, I don't know. I feel that it's important to, like, first of all, I want it, like, in terms of you reaching out, I forgot exactly what you wrote, but I want to help, if I can, I want to help guide people that are younger and are just sort of, starting or earlier in their career. And I feel like it's important. I'm a big believer. My wife always talks about, the law of attraction, which is like, whatever you put out is what you're going to get back. And I feel like being accessible and helping other people is part of that. In terms of looking at deals, also my number 2 guy at the fund always jokes that, like, I'll do a half-hour meeting with anybody, because I just find that even if it's something that we don't end up investing in, I find that I always learn something from a meeting. So I try to do that as much as possible. We do have another analyst that we hired about 2 years ago, who is really good also at sort of taking that first meeting and looking at it like I can trust that he looks at it the way that I do, in terms of if he says that it's worth, me doing a second call with them or something like that. Overall in my career, maybe it's been a little tough for me to let go of micromanaging a lot and being involved in a lot of things. So I've let go a little on that, but still, when people reach out, I'm pretty accessible, and especially for people that are that are younger and are more like looking for some advice or a little guidance. I just feel like that's I have people that did that for me and helped me along, and I feel like if I can do that for others, that it just sort of it fulfills the whole
Yeah.
cycle.
I love it, man. And it validates, because I believe the same way. And I still meet with kids in high school, and, not only is it full circle, you can get stuff out of it, you can do good. So I view it as a win-win-win. But hey, man, really appreciate your time. Let's all go attack the day. We'd love to stay in touch. And
Yeah.
if you start getting into Texas, we'll try and stay in front of it.
How can people get a hold of you or learn more about your fund or TerraAscend?
Yeah, sure. I'm definitely accessible on LinkedIn. People can reach out to me that way. I can give you my email address is jwild, that's JWILD @jwfunds.com. So if anybody wants to reach out, as we just said, I'm pretty accessible. Sometimes I'm a little crazy. I mean, you guys know I rescheduled on you a few times. But I always end up getting back to people sooner or later. And anybody that wants to reach out, I'm happy to talk to them, whether it's about potentially investing in my fund or just if they want some advice or anything like that.
Awesome, man. We love it. We appreciate your time. I hope you have a great day. Thanks again.
Thank
Thanks,
you,
guys.
Jason.